Hi, it's Dave Diegelman with Equity Real Estate for April 2025 Real Estate Market Report for Southern Utah. Welcome. Let's look at the numbers. So we've had some interesting couple of months. Obviously, there's a lot politically going on. There's talk about tariffs. The stock market goes down 20%, starts to recover. A lot of stuff going on right now. But let's look at Southern Utah. We're a unique bubble in the world. We're a vacation or destination for retirement area, and our real estate market kind of acts on its own ways. So let's take a look at this. So first of all, the number of listings. Right now we are in record high territory at 2,111 listings, residential listings, Washington County. And last year we were at 1654, so that's a significant buildup of inventory. If we look at, check that out, the new listings coming on the market, you can see they rocketed up. And this is normal during this time of year. This is our spring ramp up right there. And let's look at sold listings. So sold listings right now, we're at 419 for the month of March. And last year, for the month of April, we were at 459. So although that is a little bit less, we typically pick up in April. You can see that there's an uptick here for the next couple of months. So we're really not that far off on the number of listings that are selling. Let's go over here and look at the sold median sales price. So right now we are at 509,000. Last year we were at 526,000. This isn't comparing like properties, so really doesn't have a lot of relevance other than it just tells where everything boils out to. Let's look at the new median list price. The inventory coming online right now, the median price is 549,000 and some change, and last year it was at $530,000 and some change. And again, this doesn't mean that inventory is being overpriced right now. It could, but that's not what I'm really seeing. And an interesting thing, I will recommend that you click on the link for the market report, which is actually down below in the video notes, because I go into quite a few different details and have articles supporting such details on things like the market price and pricing right, and what's happening specifically with our inventory right now, and our absorption rate in months. So we are still in very high territory, being at 5 months, and we've had over 3 different months where we've been above 4, over 6 different months where we've been above 4, and over 3 months currently where we've been in the 5-month absorption rate. So absorption rate is how many months worth of inventory do we have versus the sales? How long would it take to sell out of everything that we have, so to speak? And again, it's very unusual for this to be that high, yet our sold to list ratio being at 95.9%. So for the last 8 months, we have been over 90 at around 96%, at or above that. And that's just a real unusual thing to happen between these two. And again, my report goes into the details of this, but in a nutshell, what I'm seeing as a real estate agent is that we have inventory that's coming online that gets listed way too high and it has to go through a price reduction. Well, that adds to the marketing time. When it does get adjusted right down to where the comps are, then it sells. We have inventory that comes on the market that is priced right where the comps are, and in general it's selling. And as an example, I've had several different properties in the last several months that have sold within as few as 11 days and sometimes as long as 60 days, but it's all sold. And so there's something to be said for marketing correctly, but also pricing correctly. And again, the monthly report goes into details on that if you're interested. So days on the market, right now we are sitting way up there at almost 80 days on the market. And last year at this time, it was about 76 days on the market. So in general, we've stayed really high for days on the market. But this is fairly normal for southern Utah. It's not unusual to be 60 days to 70 days. And then coming out of our winter months, it's not unusual for it to go up a bit. But again, the sold to list ratio, when we view it with the days on the market, it is something that outside of southern Utah, it's a very interesting dynamic that we have here. The price volume, this is just, we're going to look at just the sold sales here. This is just how many millions of dollars of inventory per month we've sold in Washington County on our MLS. So right now we're sitting at 268 and some change, $268 million and some change. And last year we were at $299 million and some change. So we're down a little bit, but last year that was the end of April reporting. This is the end of March reporting. So I think that's totally normal, and I think we will be at the same volume. What's interesting here is that we have a lot more homes that are selling in higher price categories for the year than we that make up our price volume as opposed to the units. So let's look at the units and the different price categories down below. So we're going to look at sold listings first. So you can see the positive territory is going to be 250 to 299. Those are predominantly going to be condos, some of the condos, but then also single and double wides that are on real property. And then the next category that's in the positive side year to date is the 400 to 449. And for some reason, we've had a lot more inventory come online in that price range. And this is good to see. Now, because interest rates have been high over the last several months, and by the way, they did just come down, and they expect to be coming down over the next quarter by a lot of analysts, but this could drastically affect these marketplaces down here in the sub $500,000 marketplace. The next area that we have for increase is going to be at the 500 to 750, which, by the way, is our largest market segment. And we have a 12.8% increase this year to date, over last year to date. And then positive territory again, 750 to a million. And this is a very interesting category because if we took 5 years ago, this was a category that was like not touched that much. It was way lower in numbers, maybe 6 years ago. But as time has gone, those properties that I marketed or looked at 6-7 years ago, it seemed unfathomable that they would reach this price range. And now that's kind of our normal price range for a lot of properties. The $1 to $2 million marketplace, our numbers fell 9%. But we're only talking small number. Well, not really small numbers, but you can see the year to date being 89 versus 81. Now, month to date, we're down 5 units, so not a huge thing, and we're down 8 units on that. This is a category to watch because if we have money coming out of places like California and other areas where houses are more expensive, which is what has driven our marketplace up, we're going to see this expand, in my humble opinion, significantly. And it's hard to say, but a lot of times when stock market prices get volatile, people start parking their money in second homes. And southern Utah is one of the top 5 places in the United States that people start to do that. So we could see an increase, especially in this price category right here. Now, the categories of the 2 to 3 million, year to date, only 11 of those have sold, and 3 to 5 million, only 10 have sold. And I say only, but I can remember when there's, and this was just a couple of years ago, where there was only 1 or 2 of these that ever sold for the whole year. So the fact that we've got a marketplace here tells me anyway, that money is coming into our area to park money or final retirement or forever home in those areas. So it's pretty speculative. But if you went to the Parade of Homes this year, most of the homes were over $5 million, or maybe not most of them, but certainly a high enough quantity of homes were over $5 million to where it seemed like that was the norm. Now, Parade of Homes doesn't reflect our marketplace, but it has been very accurate in the last 15 years at predicting where the marketplace is going. So we'll see what happens. $5 million plus, we're down 50% because 2 units didn't sell year to date. So again, there's just not enough numbers in these categories to really make any type of statement about it. But the fact that inventory is being sold in those areas, and again, these are the houses that got put on the market. There's homes that were built for people, like some of the Parade homes, where they don't show up on our MLS because they were, it was a builder just, being hired to build a home. So interesting all the way around on the numbers here. And if we go down below and look at the active listings and new listings, oh, by the way, pending listings, I should go through this. Pending listings really are going to reflect what the sold listings are over here. These are ones that are under contract, but we really don't know how much they're under contract for. And yes, the numbers jump a little bit from side to side, but there's nothing striking in the trends of, what new properties are selling. So to give you an example, in the 750 to a million, we only have a 2.2% change this year to last year, but we're just starting out that season. Whereas the sold ones, we have a little bit more accurate picture on what's actually closed. And so that's a little bit of a difference right there. Again, the other categories up higher don't really have a lot of relevance, but I don't put a lot of relevance in the pending listings right now, because a lot of those also fall out. And I should mention that we have close to 25% of our listings that go under contract that fall out for various reasons. So as an agent, when I represent buyers, I will sometimes look for the contingent listings, and those are contingent on other homes being sold by the buyer that's under contract. And sometimes if I'm working with a cash buyer, that's like gold for us, because oftentimes they're on what's called a 72-hour clause, where if our new offer gets accepted, then the original buyers who are contingently selling their home, they have 3 days, 72 hours to take that contingency off the market. And a lot of times for cash buyers, this is a way to pick up a buyer, or anyone that is financed as well but doesn't have a home to sell. So one of the strategies, as the market, if it becomes competitive for buyers, there's several different strategies that you can utilize where you don't have to have your offer contingent on the sale of your house. So talk to me if you have any questions on that, but there's some definite strategies that work, and where you don't have to put out a huge risk for that. Active listings, we see a buildup all the way around on every single category. So again, the inventory buildup that we have this year is unprecedented. It's several hundred units above what we had last year. And that's a little concerning. We're definitely competing on existing homes with new home sales. And builders are building like crazy around here. However, you will notice that as they do new phases on subdivisions, those phases are usually less than 10 houses right now, where they used to be 20, 30 houses oftentimes on the bigger developments. The other thing that we're going to look at in our newsletter, which again, the link is below, is lumber prices. Because of the tariffs with Canada, we could see a significant jump in lumber prices. They're predicting that the tariffs will go up to 34% from around 14 or 15%. So that's a significant increase in a cost. So this could be the time, and we talk about this as in an article in our newsletter. This could be the time for buyers to buy slightly used inventory. And another reason that slightly used inventory makes sense is because the previous owner usually puts anywhere from $40,000 to $80,000, sometimes more, into things like landscaping, upgraded lighting, whatever on the inside of the house. There's all sorts of things, because builders for years have just been offering homes the way they build it. They're not, a lot of times builders aren't offering custom colors, custom lighting, custom anything. You get a standard package and that's it. So we're seeing those trends change a little bit right now. We're seeing builders get a little bit more buyer friendly. And I suppose that that's going to change, kind of go towards that if our inventory buildup continues, because the builders will have to get more competitive with what they're doing. We are seeing a lot of seller contributions to buyers' closing costs and points buy down. So if you were to take like a 6% in mortgage rate, you might be able to buy it down to 5.9 or 5.75%. And I have a really cool article this year on mortgage assumptions, assuming someone's 3 or 4% mortgage in today's market. What that means for a seller and the benefits and the financial reward for a seller, and what that means to a buyer, the benefits and the financial rewards for a buyer. So look at those things, because I think you're going to be kind of blown away at some of the more creative tactics that can be used. Now, I'm not an accountant. I'm not a lawyer. So what I do is present what is being done, how it's being done, and then guide you to people who specialize in the legal fields that are associated with that. So anyway, thanks again for tuning in. You're free to visit my website, which is utahdreamhomes.com, which is utdreamhomes.com. And you can search for homes for sale there. You can search for sold homes. You can search for techniques and blog articles on how to sell, staging, all sorts of things that are on there. It's a really valuable resource. So I can see from the number of people that visit our websites and our YouTube videos and such that quite a few of you watch these videos and go to the market reports. And thank you for that. I always thought this would be something good to just it's like singing a lullaby to go to sleep by. But I love numbers. I grew up as a math guy. I grew up as a calculated risk taker, and I love numbers. So I always loved looking at the real estate market by numbers. I will say this, that the showings that we're getting in response to advertising has been teeter-tottering. We'll have 1 week of a lot of activity and then 3 or 4 weeks of mediocre activity, and so that's been a seesaw going up and down, and to me that's a healthy marketplace. So I feel like we're in a really healthy marketplace. Could we use a correction? I don't know. It's kind of hard to say, but anyway, have a great 2025 and God bless you.